What is going on, everybody? Welcome to episode 2 of the Forex Bootcamp. So, episode 1, you went over the basics, and now we're going to just be stepping into what kind of analysis that traders use in order to compute their analysis. In order to take their trades, etc., etc. So, this isn't going to be this isn't going to be diving into it specifically what the analysis looks like. It's just a general introduction, just so you guys have got a clear idea. And then we're going to be getting into the analysis in some later videos. But without further ado, let's begin. So, what we're going to learn today, we're going to talk about the two types of Forex analysis, which is fundamental analysis and technical analysis. We're going to look at why traders mainly use these two and their applications in your own trading style. Because I said at the beginning of this course is that you guys, or maybe I didn't say it, but if I didn't, then I'm going to say it now, is that this is also an opportunity for you guys. And you'll learn that because trading is so personal, you are able to decide how you want to trade, what suits you, what do you enjoy, and you're going to be able to pick out things from this course and be like, well, do you know what? I know that JB is he's more of a chart guy, not really too much in the fundamentals, but I kind of like the fundamentals. He's more into the Forex and the commodities. I'm more into the crypto. So just use this as kind of like a rough guide just to see what you get drawn to, essentially. So, fundamental analysis is basically looking at the fundamental factors that drive currency prices up and down. It's got a very big focus on supply and demand, which essentially means that, the higher there is a supply, the lower supply means that there will be higher prices, higher demand means higher prices, lower demand, lower prices, and higher supply, then lower prices. Very simple. Macroeconomics plays a huge part in this fundamental analysis. So people will look at various factors such as inflation, GDP, interest rates, major news events, and political instability to be able to place big Forex trades. So you're going to need to do your own research, okay? Before you go into the next video, which is pretty much all about fundamental analysis, you guys should just go ahead and research these points. Go ahead and research oil prices. Go ahead and research how war can affect currencies, how it affects economies, looking at something called the US greenback, which is another name for the US dollar, and also just looking at the relationship with gold to all of these, okay? You don't need to be an expert. Just a few notes is absolutely fine. So technical analysis is all about the chart work, okay? You're looking at mainly candlesticks, you're looking at trends, you're looking at something called price action, which is simply how price behaves. Looking at something called key levels, which is what you'll find out is these are places where price is more likely to bounce from these levels. Very, very important. You will also be looking at patterns, okay? How you get into the market. But the one thing I will stress to all of you guys, I can't be saying to you, you can't do this, can't do that. And I'm not really saying that they don't work because I guess some people use them and there is a use for them. Just don't waste your time with indicators. Okay, I'm going to say that very plainly. Don't waste your time looking at indicators. For those of you that are quite new and don't really know what indicators are, they are simply these things you can put on your charts that will give you an indication that price will move somewhere. So for example, it may look like certain lines on your chart that'll be going across, and maybe when two of these lines cross over, you want to buy by here, you want to sell by here, or it gives you some kind of added reason to get into a trade. Oh, I saw this thing on the indicator showed me something, so I'm going to buy or I'm going to sell. Now, I'm not saying they don't have their uses, but what I'm saying is the reason I would advise to not use them is because they're always lagging, and you really want to be primarily basing all your knowledge upon focusing on what price is doing and being able to read price, because you really can read price. You can read it when it's going up, when it's going down, when it's likely to reverse, what it's doing. It's telling you a story and you can listen to it and act off it. With indicators, it is always going to go off what price has already done. So because price has already moved this way, it's now showing the indicator. And for me, it just means, I don't know, it just causes problems. For those of you who really want to learn, don't even need to look at it. I'm telling you, you do not need to look at it. I've found all my success without ever using a trading indicator. And when I use the indicators, they just give me issues. Okay, it sounds nice because the YouTube video looks cool. It looks interesting. You're able to put it on your chart. It looks nice and fancy, but it's all bollocks. It's all bollocks. All right then, so why do traders only use these types? Are there not any other types of analysis? And to be honest with you, I don't think there is, because I think every single analysis will be falling into these two categories. Because if you're somebody that looks at like politics or looks at anything, you're all looking at the fundamental side. And if you're somebody that maybe doesn't look at like price action, but you use maths, it's still a form of technical analysis, in my opinion. You're still using the chart for something. Okay. So the reason why people use fundamental analysis, right, is because they like to look at macroeconomics. The way they trade is more based off fundamental reasons. For example, this country went to war and their currency is going to tank, so I'll put a big, trade on. The reason also why people like fundamental analysis is because they got a bigger time horizon. They will be placing trades for medium to long term. Okay, I'm not talking just, a couple of days, maybe a couple of weeks. These guys will probably be planning positions mad in advance, right? They've also got the scope of the bigger picture. They're not really looking at the day-to-day actions of price. They really don't care, and that's probably what they prefer. And honestly, fundamental analysis really is the backbone of price movements, but it isn't everything. Okay, and what these traders are allowed to do, what they're able to do, is that they can ignore a lot of the bullshit they might see on the charts that a technical analysis trader might see. Okay, whilst a technical analysis trader might be all chart work and as long and short term, right? Sorry, long and short term. Let me go through that again. Okay, so technical analysis traders, it's all about the chart work. Okay, they are all on the charts. They're not really looking too much about fundamentals. They kind of do, but mainly it's all about the chart work, and they prefer that, right? They will be going for long-term trades and short-term trades, and they can go for medium-term. It's completely up to them. I wouldn't really say fundamental. You can do short-term, so that's why I put long and short-term for the fundamentals. Sorry, for the technicals. When you use technical analysis, you do have quicker ways to get into the market because there is, that you just have a bigger scope to do things because the amount of things you can see on a chart is so much. But whereas with fundamental analysis, you kind of have to be wrong or you're not, if that makes sense. You're either right or you're wrong, and you have to paint a very strict picture. Whereas with technical analysis, you can be very fluid. You can have one bias in the morning and another bias in the evening. You can have one trade going one way and you could change it halfway through. It's just on, what the market is giving you based on the patterns. Okay, and there we go, patterns and psychology. The chart work is all about trader psychology. Okay, so you won't really need to know much about this, but everything that you can tell about the mood of the market is all reflected on the charts. Okay, and you can just be more flexible. You literally just can be more flexible. It's just a fact. So the big question is what kind of trader are you going to be? So my trading academy, FFT trading, is primarily technical based trading. Okay, I never really look at fundamentals. I've never needed to. But however, there are cases where I will look at it, and once I get a bit more proficient in my career and I've got a lot more money, then I will be able to put on these big trades, these big fundamental trades. But in order to get that, you need to have a good understanding of both, in my opinion. Why not focus on them both, right? Focus on the technical analysis because most of you are probably going to find success. I'd say 100 people watching this, 90% of you will be technical traders. And if 100 of you wanted to be fundamental traders, I'll probably only say 5 of you are going to be correct a lot of the time. Most people getting into this want to be quick. They want to, do what the traders, what they think traders do. And that doesn't really look like fundamental trading. It's mainly just technical analysis. But if you have a great, focus heavily on the technicals, but you've got a good understanding of fundamentals, you are going to be very, very strong, a very strong trader. And the last point is not to say that fundamentals don't have their place. It's just if you're a retail trader, you got to decide what's right for you. If you really want to do fundamentals, I'm not saying don't do it. I'm saying go ahead and do it because you can make a shit ton of money. You can make a shit ton of money doing them both. But with fundamentals, though, if you're coming in trying to be the chart guy and you kind of want to do a fundamental trade, you're going to be doing a lot of research and a lot of planning and a lot of time. Now, that is very fun to the right person, but if you prefer to do the chart work, then just stick to technicals and just have a little bit of knowledge on the fundamentals, which we'll go over in a later video. So just a quick conclusion. Fundamental analysis, we're looking at the fundamental factors that drive price, we're looking at macroeconomics, and we're looking at more of a medium to longer term approach. Technical analysis is all the charts, chart work, candlesticks, price action, patterns, and if you use both of them, you're going to do very, very well. Okay, they both can provide very good results if you do either or both. It just depends on the style of trading that you want to employ. Like I said, trading is very, very personal. Okay, so if you want to be whatever trader you want to be, you can be that. Okay, so go ahead and study this, have a little research, and once you feel confident, you can move on to the next point. Thank you so much for watching, guys, and I'll see you in the next one. Oh, I had a feeling, hang on, I didn't go through the next stuff. Right, okay, cancelled that, called that a little bit early, but here we go. So next episode, we're going to be looking at a deeper insight into fundamental analysis. We're going to look specifically why certain economic factors are important. We're going to look at why these factors drive price up. We're going to look at the role of the US dollar in global economics, and we're going to look at how global crises affects markets. So I'll say that again. Thank you so much for watching, guys, and I'll see you in the next one. Hey, see you later.